My name's Alan Carter. I'm the CEO of Cabral Gold. I'm the largest shareholder in Cabral Gold, and we have an advanced exploration project in Brazil. It has resources, 2 gold deposits that have been defined there as of a few years ago that had 1 million ounces, and we've been drilling quite extensively. So we're currently in the process of updating that resource.
Alan, good to see you. Sweet. I think it was beginning of June, literally beginning of June. You've been busy boy. You just raised some money. I'm keen to see what you're going to do with that and why you chose to do that now. Permits looks like a bit of news on that front, and you got some test results back as well. So where do you want to start?
Well, why don't we start, Matt, with the metallurgical results, because they've been 6 months in the making, if you like. We first sent a bulk sample up to the lab in Reno, Nevada, the Caps Cassidy lab, to test this oxide material. As you know, in the last sort of 12, 15 months or so, we've discovered 3 oxide blanket zones, and this is mineralized material which is unconsolidated. It's not rock; it's been weathered to mud and sand and soil. Anyway, we've got 3 of these zones. Don't have a resource on any of them yet, but we will have resources on those 3 zones in the next few weeks, and we will update the global resource estimate. We'll come to that in a moment. But we didn't have any metallurgical data from this material. Now, obviously, because this material is at surface, up to about 50 meters thick, depending on which blanket we're talking about, the mining cost of this material should be extremely low, so it won't require any drilling or blasting. We thought there was a really good chance that this material could be amenable to heap leach processing, which, as you know, is a very low-cost method of extracting gold. And so that's why we sent the bulk sample up to the Caps Cassidy. We got the results a couple of weeks ago. On that bulk sample, they basically put this unconsolidated oxidized material in a column, in a plastic column, and leach it with a cyanide solution, and the recoveries came back. So, and we've got 82% recoveries after about 70 days, and the material still leaching. Now, that is a very, very good recovery in terms of heap leach. I mean, most of, for example, Barrick's mines, or a lot of those big mines that they have in Nevada, leaching, the recoveries range anywhere from about 55 to about 70, mid-70s in terms of percentages. Eldorado's got a big mine in Turkey, mid-50s% recovery. So, to have 82% recovery is extremely good. So it's very encouraging.
Okay, and so how does that work in the economics? So obviously, longer you leave it there, hopefully the better the recoveries get. But do the costs kind of go up? Is there some sort of graph which says optimum number of days is X? Yeah, basically what you do is you mine this material and then you mix it with cement. So you form little balls and you put it on heaps and then you leach it. And I don't know exactly how, obviously the leach rate, the recovery rate flattens off with time. So you get more gold out within, in the initial days. I think we got sort of recoveries within 15 days were about 70%. So the curve obviously flattens off. How long you keep leaching the material depends. I mean, in all likelihood, what will happen is there'll be layers of material that will keep going on top. So the earlier material that you put on the heap earlier will obviously has a lot lower recoveries as the time progresses. So as I said, it's highly encouraging. It's highly encouraging, but I guess what I'm working my way towards is we've talked about, you kind of high grade stuff, district-wide opportunity enhanced by this kind of oxide blanket component, which could be early revenue for you. And that's a bit I think everyone's looking at this story for and saying, right, okay, talk to me about that. How do we go from, column-leach testing, raising $3 million today, and the permits, which I guess have a big part to play here, and you getting into revenue. So maybe, I don't know if you want to conflate all of that.
Look, the Met stuff is obviously a big step. The next steps for us really are to demonstrate that this oxide material is economically viable. Now we've got the Met results. So we are planning on kicking off a PEA in the next few weeks and months. We're doing some internal scoping work, looking at what the likely OPEX and CAPEX costs are going to be ahead of that PEA. That's internal work that we're doing. We've we're working with an engineering firm in Brazil on that. And obviously we're going to soon have in the next few weeks, as I said, that resource update is really important because in the next few weeks, we should have some sort of idea about how much oxide material is in these 3 blankets. I think the amount of material will continue to grow in terms of the oxide potential because there are other areas where we've got indications of more of this oxide material. So we'll continue to grow. So look, over the next few months, I think all these things are going to come together and basically give us and our shareholder base a pretty good idea about the economic viability of these blankets. Now, in parallel with that, you mentioned that we've been doing a lot of drilling into the underlying hard rock material. There's a lot more gold in the actually unweathered, unoxidized hard material underneath these blankets. And we've been defining some very, very nice high-grade zones within both the 2 known deposits and in a couple of new areas where we've made discoveries. So, and then in the last few days, we've also, the other thing, just getting back to this oxide material, the other thing that's happened in the last few days is we've been granted installation licenses for the 250 hectare central block that encompasses all of the main deposits that we've got at Cuiú Cuiú. So we've now got the environmental permits in place to actually build that heap leach plant for the trial mining.
Okay, that's a big deal. That's a really big deal.
Yeah, it is a big deal. It's a really big deal.
Let's say why. In the context of what's going on in the market out there, we're seeing a lot of not so good news coming out of South America broadly, and there's socialist kind of headlines where we talk companies are not able to move the pace that they want to move ahead. So it's a big deal that you kind of got those permits. But again, I want to kind of bring it back to the money. I want to bring it back to the investing thing. It's like you're kind of laying out the kind of path over the next few weeks and months with regards to PEA, possibly even a resource update.
Definitely a resource update. The resource update will come before the PEA, Matt. The resource update we should have in the next 4 or 5 weeks.
Brilliant.
That will come first.
So that's a big deal. I mean, when's the last time you did that?
June 2018. And so that resource in June 2018 was based on about 29,000 meters of drilling. We've done, last time I looked at it, somewhere between around about 36,000 meters of additional drilling since 2018. And obviously none of that new drilling. There's been some incredibly high-grade intercepts and lots of low-grade material too, but none of that drilling is currently incorporated in the resources.
Remind me of the existing resource number is what?
It's about 1 million ounces, averaging 1.2 grams a ton. So there's 2 deposits which are 5 kilometers apart. One's called Central, one's called MG. Now, one other word on the resource, and we have talked about this before in 2018. If you look at that press release from June 2018, there's actually a comparison in there of the impact of the top cuts that were imposed that the engineering firm that did that resource estimate. They put some top cuts on the deposit. Those top cuts are a lot lower than, for example, the deposit next door to us. Was not included in the 2018 resource estimate, a lot of it. And the reason it wasn't included was because the engineering firm, Micon, said, look, you don't have enough drill holes, sufficient drill holes. So we're going to assume all these high-grade intercepts you've got are statistical outliers, and we'll cut them way back. I mean, so for example, there was a zone that was at one of those 2 deposits that was cut to a maximum of 2 grams a ton. And one of those drill holes, for example, the actual drill result was 2.5 meters at 55 grams a ton gold. Well, that became 2.5 meters at 2 grams gold. So a big part of what we've been doing over the last few months is actually getting a lot more holes into these high-grade cores. And both the 2 existing deposits, in the course of that, we've discovered 3 new oxide blankets and two new hard rock deposits too. So, yeah, there's been a lot going on.
There's a lot going on, but again, I always like to kind of help the audience here try to understand the mindset of the management team board in terms of the decision making. Okay, the markets are horrific at the moment. For companies with money, it's a little bit easier because they don't necessarily have to worry about the cost of money. And then the companies like yourself have got to make that choice of, do I hunker down, just don't do anything, don't spend money, or raise the money, which you've just done. It may cost me a little bit more than I want to be paying, but the upside is, greater than the kind of the sum of the parts, as it were. So you've obviously taken the choice to raise the money, not as much as you initially, talked about. You talked about up to 5 million. So what was the kind of dynamics of those decision making in the context of the market, and why did you feel it was the right thing to do to move ahead with that?
Well, look, I mean, right now we're not in production, so we've got costs, obviously. I mean, even if you do nothing with a public company, you've got costs. So we needed to raise money, you can't always pick the time to do it. So we've decided that rather than do nothing, as a lot of other companies have basically shut everything down and fired everybody, there's quite a lot of negative things with that. Obviously, you're saving money, but you're losing a whole team, and you're basically freezing things. So we've decided to continue to move forward. We have cut back the number of rigs on site. We had 5 rigs turning. We're still drilling, but it's a much more sort of lower level and obviously lower cost. So, we want to keep moving our project forward. A lot of the stuff that we've got planned over the next few months, particularly the resource estimate and a PA, is relatively low cost. And with, a lot of the drilling here has already been done. So that was the mindset, I think. And as you know, that $3 million that we've just raised, management's put up a significant chunk of that. I'm already the largest shareholder, but I wrote a 6-figure check into that financing too.
Right. Okay. Which is great. It's nice to understand the thinking, but so it's basically you're following the same plan, but you're kind of slowing down the rate at which you do that, mindful of what's going on out there.
Yeah, we're not being as aggressive with the drilling as we initially anticipated,
and that's fine. That's fine as long as you can, tell the story and paint the picture of this. Are you still sticking with the Oxide component being an potential early revenue sort of, cash flowing mechanism for you as part of how you develop out your projects?
Yeah. Look, what we've got, Matt, is a district. This really is a district scale play. We've got 2 known deposits, a number of new discoveries, including 2 hard rock zones and 3 oxide zones, which we didn't know about back in 2018. And then outside of that, we've got another 45 targets, where some of which we've done a little bit of drilling, trenching, a little bit of sampling. And a lot of these targets look extremely good. They have a high-grade boulders on surface. They have, we already have some very good drill holes on some of these other targets, but we haven't done enough work. Now, the challenge for us as a management team, having a district here, which is about 2/3 the size of Timmins in terms of its aerial extent, with all these indications, most of which we haven't fully explored yet, the challenge for us is how do you finance that in a market which is basically a roller coaster? How do you keep moving forward? Now, the identification of these oxide blankets actually give us an alternative to the standard route which all exploration companies use, which is equity financings, private placements, i.e. you offer shares to investors, and your basically number of shares on issue gradually increases. Now, that's fine, but when the market is horrific like it is right now, you have no control whatsoever over your cost of capital. It's something you can't control. So you can keep knocking out fantastic drill results, yet your cost of capital suddenly doubles in the space of a couple of months. Your share price will halve, the cost of capital is twice what it was a few months before. Now, if we can get these oxide blankets into production, even on a trial mining basis, it should create a significant amount of cash that will allow us basically to self-fund and explore the rest of this district. Because make no mistake, this district is a multi-million ounce district. But we need to be able to, demonstrate that and fund that. And so rather than, going back to and being to the market every time you need to raise money and being held hostage and feeling like you're on a hamster wheel, we want to basically step off that hamster wheel, and this gives us the opportunity to do that.
Well, that's what I think investors are looking at here, because there are very few companies that can do that game. Not that most North American companies do that, but the ones that do, they don't necessarily have the technical expertise to actually build a mine to create that revenue, no matter how small or how large. This, you were saying to me, is 1, it's your intent. 2, it's heap leach, relatively cheap in terms of the CapEx, OpEx component.
Very cheap.
And 3, technically, not a hard thing to do in terms of building a competent team to actually deliver that. And 4, therefore being non-dilutive to the company going forward, i.e. you're self-funding to a greater degree in terms of exploring the district. I think that's, as long as you keep telling that story, then I'm listening, right? Because as you say, in a market like this, it's very, very difficult, one, to kind of stand out from the crowd. It's a lot of white noise, a lot of desperate people saying, desperate things. So I'm kind of, keen to hear what you're going to do in terms of that $3 million. And I'm also, but the thing I haven't heard from you today is with regards to timing of how these things play out. Resource update, I get. PEA, I get. I haven't kind of got timings on those. And at the point at which you're in a position to make a decision about monetizing or raising funds to monetize the Oxide blankets, can you give me a sense of that?
Well, I have mentioned timing. I have sort of told you that the timing for the resource update is 4 to 5 weeks from now. So that would be in July, early August. The PEA will be later this year. I can't give you definitive timings on that because we haven't even started that. As I said, we're doing some internal scoping work, but it will be sometime this year. So I would hope that, by the fourth quarter, we should have some sort of a pretty good idea, and that we'll be able to communicate that to our investors and our shareholders of the economic viability of mining one or all three of these various blankets. Now, beyond that, then the question becomes, okay, well, depending on the capex costs and the various risks that we've identified in the PA, at what point do we then seek construction financing for that? Do we do it on the basis of the PEA? As you know, there are some companies out there that actually have moved into production, small scale production, without even a PEA. Or do we then do, a more advanced PEA or a pre-feasibility study, or indeed a feasibility study? We don't think that we're going to need to do a feasibility study, which is obviously for a big operation, for example, that needed $250–500 million of capex, you'd obviously have to do the full works on it, and the feasibility study, which would cost millions and probably a year or 18 months to do. Now, I don't think we're going to need that. The question is, as I said, will we be able to actually be in a position to finance this thing on the basis of the PEA? And it will depend on the results of the PEA, Matt. I mean, if the capital costs are very, very low with a PEA, then we'll obviously be looking at financing this thing, talking to potential funders. In fact, we've already opened a number of lines of dialogue with potential funders for these smaller types of operations. So, So that's basically the time.
What's interesting,
I can't give you any more definition than that.
No, I understand that, but what I'm trying to do is help the guys and gals watching this. And, if I look at the kind of handful of people who've done a kind of pre-PEA or post-PEA fundraise off of a simple oxide heap leach, they're talking sort of $10 to $15 million, right? Depending on the opportunity ahead of them. So it's that sort of quantum. I'm not saying that yours will be that, but I just want to help people understand that that's the sort of numbers, not big numbers generally. Okay. So and the way you finance that could be interesting, again, depending on the results of your PEA, because it's not necessarily equity. It's probably a big part of it will be debt. If not, I've seen a couple
probably not equity at the current share price.
So it's interesting times ahead of you. Well, I'm obviously you've been busy. You've kind of laid out the next few weeks and months. I guess I'm kind of keen to stay on top of this story, because I think the Oxide blanket bit and that kind of non-dilutive component is an interesting differentiator for a company of your size, for sure.
Yeah, I think, Matt, in terms of sort of news flow from us, I mean, there's a lot of drill results that are pending. So I think our shareholders can look forward to a sort of fairly steady stream of drill results. Obviously, that revised resource estimate is a big deal. And then, additional news as we continue to sort of demonstrate the economic viability of these blankets. I mean, it's going to be quite an interesting time for us. It already is. The fact that, we've got these excellent met results from the oxide material. We've got some excellent exploration results. We're defining high-grade zones within the two known deposits there, which is a big step forward for the primary material. And now we've got the permits to actually build this heap leach operation for the trial mining. So there is a lot going on.